Everybody, happy Saturday. Lot to do today. On our way to a showing. I got a little bit of windshield time before, and I want to get into...
In a quarter mile, continue straight onto Ballcamp Pike.
Crazy here in a minute. But I want to get into a video of basically my prediction for interest rates this year. As mentioned in the title of the video, I was wrong in 23, and I was wrong in 24. And so this year, I actually hope I'm wrong, and I'm going to explain why I hope.
Continue straight onto
In 23, obviously, I was like, oh, yeah, rates are come down. Rates are going to get in the fives. You know, no big deal, right? All these predictions and stuff like that.
Continue for 6 miles.
Completely wrong. I don't think rates in 23 ever got into the fives. 24, oh yeah, rates got to come down. They're going to get in the high fives, right? They're going to get in the high fives. Couldn't have been more wrong. I do know last year, I think they got like 6.2, and that was right before the Fed done their first rate drop, which if you watch the video that I did on that, I was like, yeah, hey, we're going to do Fed's going to do a rate drop. I think they ended up actually doing a half a point the first one, which, you know, common sense of math would tell me, all right, well, great, half point rate drop. That should get us down into the fives, high fives. Boom, we're going to be setting awesome. I even had talking with people, I was like, hey, should we wait to put an offer into these rates drop, blah, 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 blah. I mean, I was having all these conversations, and Fed did their rate drop, and rates shot up. Went the opposite way. Now, again, I know enough about how these mortgage rates are calculated, because mortgage rates and interest rates, the interest rate by the Fed does impact the mortgage rate. However, there are other factors, and I'm just going to say like the economy, employment, index funds, the Treasury. There's all these other huge factors, and there's many of these smart companies that make, you know, millions of dollars based on all these items moving. And to say, like, I know exactly how it is and what's good, what's not, what makes rates go up or down, I'd be lying to you, right? But I just know it is extremely complex, yet also, like, volatile. Is that the right word I'm looking for? Volatile. That it can move, right? I've seen rates, you know, jump a half point in a day, maybe a little bit over a half point in kind of both directions before. But right now, I think rates are low sevens, which is terrible, right? I don't think there's one person in the real estate world that says this is a good thing. I was inflation, right? All these things. So, you know, my last couple years predictions, I always thought it's coming down. Now, what I will say about this year is we just had the busiest December, as I'm talking like our team. And arguably the busiest January, which is what we're in now, than I've had in my career. In 23, I think we closed a total in December, the whole year we closed 162 contracts in 23. But in December we closed 2 contracts, right? And so you could see like the market again, holiday season, right, really slow. Well, this December of 24, we closed 19 contracts. There was a point we had over 30 pending contracts, which is a wild, like crazy December. Now, it wasn't anything that the market did or anything. I think it's just really just to credit the people we were working with and the team and how we work and timing, right? It wasn't like this all of a sudden the market got better or the market got worse. It wasn't. I think it was just, you know, it was right place, right time, doing the right thing and helping the right people and the right houses coming along. But that was super busy. Now, we're obviously here in a couple of days have a change at the president level. And this is where a lot of people stick their foot in their mouth. And I don't always correct people because I don't want them to feel like I'm being mean or belittling them. But just because Trump comes in office, rates are not going to all of a sudden drop. I wish that was the case. But rates are not going to drop. And they're like, oh yeah, change. Well, obviously Trump is very pro real estate. That's where he's made his billions of dollars, is in real estate. He's very pro real estate. So he understands the impact it has on the economy, and he's going to do everything he can to really help the market. I do believe that. But the Fed, the people who do actually control the interest rate, which is which is a direct impact on your auto loan, a direct impact on your credit card. That person is in office, I think, through mid-26. Now, there's like some rumors and stuff. Can Trump actually come in? Can he fire him? Technically, he can't fire him, but is there loopholes? Maybe, maybe not. Can he put pressure on him to do all this stuff? Maybe, maybe not. I don't know, right? But from my understanding is the guy, the Fed chair, has said that he is not going to quit. He's not going to let Trump run him off. And so he will be in that position through mid-26. Now, are they going to butt heads enough for him to try to sabotage the economy and ruin his own legacy? I don't know, right? That's just, everything's political these days, so you don't really know, right, when it comes to political and pride and all that, what somebody may or may not do. But my prediction for this year is I don't think we see rates get in the 5s. I do think realistically we're probably at the high. I don't know that rates are going to get above 7.5 because we've had that full interest rate drop that by 1 point. So if that wouldn't have happened, today interest rates would be 8.2. Right? Let's just use that as a quick example. If that didn't happen, rates would be 8.2. So because that has happened, and I don't know that we actually seen 8.2. I know we got in the 8s there for a little bit, but I don't know if it got up to 8.2 or not. So rates are considered extremely high right now. But so I do think rates are going to probably float down and probably hover more around that mid 6 point, which is obviously not ideal, but it is what it is. So I do think that, but I do not think that we are going to see rates get into the 5s as far as prime. Now, keep in mind, if rates do hit 6.5, your FHA loan, your VA buyers, they are going to see rates in the 5s. So they will see that 5.9, 5.8, when rates kind of get in there, because they're naturally about a half point lower than prime on average. And then certain lenders maybe running specials and here and there, right, doing different things, maybe can get you down a little bit. But as far as prime goes, I don't think that. Now, as I mentioned, I've been wrong the last 2 years. These last 2 years, it kind of sucked to be wrong. It didn't benefit necessarily me, didn't benefit anybody. This one, my prediction now, and I'm not doing this because I'm trying to reverse psychology myself. This is generally what I do believe. That I really don't think we're going to get in the 5s as far as prime. I just don't see how that happens. But I would love to be wrong. I would love to be 0 for 3 on interest rate predictions for the year. And this last one just benefit everybody. It benefits me, benefits the whole real estate market. It benefits, buyers and sellers. Because it means there's more buyers. It means they can afford more. For buyers, it means that they can afford more. They can get better houses, and for the same price that they were paying before because of high interest rates. And that's kind of what, a lot of people don't realize, right? A point drop, and I don't have the math in front of me, but a 1 point drop on a $300,000 house, that could be the difference of you buying a $300,000 house or a $330,000 house for the same payment. Literally to the dollar, your mortgage payment exactly the same, and you have a house that's worth $30,000 more, right? So yeah, just kind of want to make a video on giving you that. And again, not intentionally using reverse psychology, because I've been 0 for 2 the last 2 years. But boy, would I be thrilled if I'm wrong. But based on what I know, everything that I'm seeing, I don't think that there's any type of magic wand that's going to be able to come in and get rates down into the 5s. So the people, it's like, oh, let me wait until such and such, and the market does this or crash or all that. Same thing, right? I've already done my market predictions. I don't necessarily think we see a crash or any type of boom. I do think it's case by case, meaning, hey, Steven, should I rent or buy? I do think you got to look at your exact situation and look at it. For some people, it may make sense to go ahead and buy. For other people, nope, it may make sense to go ahead and rent based on your scenario. So if you have questions on that, I'm always happy to help and answer stuff and kind of put myself in your shoes to do that. But, as always, got questions, just reach out anytime. Happy to help. See ya.